Don't underestimate the power of starting small. In this video, I'll show you how to be profitable with your $10 trading account, and by the end of it, you'll be amazed at the potential gain. Make sure that you connect with me on all social media platform at Dan Tech Forex for more valuable insight. Let's start here. So if I have $10 account, this is what I actually have to do. I'll have what we call the do's and the don't. Let's start with the don'ts. So on the side of don'ts here, I'll make sure that number one, I avoid when the market is very volatile. And when the market actually becomes very volatile, sometimes when we have high impact news, if you follow on the fundamental analysis, so make sure that you know at least the fundamental analysis. You can know when we have high impact news, and you can be avoiding to trend when we have such a time. So avoid fundamental, avoid the high volatility. The reason I'm saying this is because market can just go crazy and you can lose your money very fast. And avoid volatility. So that is what you actually have to know here. And number two is to make sure that you trend. Don't trend with small leverage. Don't trend with small leverage. Don't trend with the small leverage. Over here, all $10 account, make sure that you actually use the highest leverage that you get using the broker that you have. But in this scenario over here, if you're in Kenya, you always know that you cannot trend with above 400 leverage if the broker is regulated here in 254. But for other brokers, you can use 1000. So if you have $10 account, probably brokers that have high leverage that is then that you just hear, but 400 is actually nice here. And those are the don't you actually have to know here. Let's just go to do's. I know whether you can just go to do's or dash. Yeah, but first of all, what I actually have to consider here on terms of the do is to make sure that I'll be trading when the market is raging, and remember to avoid this. So all this becomes positive here, like I avoid when the market is not volatile, the opposite of the number one. And I'll make sure that I trade with the highest leverage. All those are in the dot. So make sure that you are trading when the market is raging, and when I'm talking about when the market is raging, I'm talking about this one. Let me show you. When the market is raging, that means, let me show you what you do. Is like buying and selling from this position. You can just adjust anytime you see the market is raging, because sometimes when the market reaches, when you don't have high volatility, the breakout. So you can see when this market is reaching, like it's from this point here all the way to this point here. So you can see all this position market moving here this way over here, and when it touches here, you can see you can sell, you can come here, you can buy, you can sell, buy, and all this. But when you see this one is moving, like is all moving and touching this point so many times, then you can just avoid. But when you monitor something like gold range here, then it can just become a very good opportunity for you to trade with $10 account. So that is one of the things I'm talking about here, ranging market that will help you so much. And number two, the do's over here that I'm going to do here is to risk reward ratio. In terms of risk reward ratio, I know this is somehow complicated to this account. Risk reward, some people call it R. So risk reward ratio is the amount of money that you are risking once to get the reward, that is the profit. And $10 account being a very small account, remember here we're just going to get in something like 1-to-1. If you get 1-to-1 risk reward ratio, that means you are risking 1 get 1, which means you are risking like $10 to get $10 account over here, or you can risk $5 to get $5 profit here. But on this scenario over here, we are risking, I just want us to risk 100%. The reason we are risking 100% here is because money here, the small account, and the market is very volatile, and $10 is actually very small. But remember, at that percent, some brokers 30% different. At that percent, you can just be stopped out, which means when you have $3, the broker can just decide to close all your trades. So 80%, that's why I'm talking about over here risking or an amount of money here. And what are the targets? The targets we're just going to be having here can be either because we are risking all amount of capital, we can just be targeting between 5 or 3. First of all, this is what I would do. I'll start to grow this account because I have $10 account here. I'll make sure at least I move this account to $15 to $15 here. Or before you go to $15, make sure that you can trade, at least get a profit of $2. You get another profit of $3. I know it's just very easy. If you actually identify, I'm going to trade of 0.01 a lot, because some of the brokers will just allow you to use that because of leverage 400 and that being 0.01. So using that, you just need to 20 pips, 30 pips, and then you just be hitting you a target $200, 500 pips, then you actually have eaten the $15 mark over here. So if you hit 15, that is just going to be amazing, because you actually have made a profit of 50%. 50%. That's very big amount of money to make in a trend. So if I make $5 in a day, that will be very amazing with $10. If I make $3, $2, then all these are good. It's not a must you make $5 in the whole day. It's not a must you make $5 in that day. But when you make $2, $3, then I think that is good for you. But make sure that you have so the one disadvantage of trading with a small account is what we call you have to be very accurate. Make sure that you are very accurate when it comes to small account. You have to be very accurate, because anytime you missed an opportunity, then just know your account, you are going to blow or your account. So that is going to be very important for you. That is the disadvantage. So make sure that you follow all those tips, and it's going to be very important for you. Arranging market is going to be helping you. Make sure that you avoid when the market is high volatile, and make sure that you target $2 to $3. And then if you know, because the risk management is not going to apply here so much, because we talk about the risk management, we're going to talk about something else different. And make sure that you raise this account. So the important thing here is raising this account to at least good amount of money that we can put stop loss and TP. And yes, so if that amount of money is $10, then it's very hard for you to put stop loss, and TP will just be there. It can be any amount of money. But remember, the market sometimes can be good. You can get a good opportunity that can move your $10 even to $50 or $100. Follow me for more. If you have any question, make sure that you leave it in the comment section. I'll be checking on that one.